Jal Irani of Edelweiss is now joining us. He's been tracking Reliance for really a long time. Jal, firstly, thanks so much for taking out time for us. What do you make of the numbers?
Well, as you said, they're good numbers. I think the operational leverage is really kicking in for Reliance Industries. So essentially, as they operate the plants at higher levels, the fixed cost doesn't increase, but there is, to that extent, an exponential benefit to the bottom line. If you look at the recently commissioned off-gas cracker, it's operating at about 106% utilization. And this has been Reliance's forte even in the past. So as they actually get more purchase out of the same capacity, that tends to help. Similarly, even in retail, their LFL growth has been 20%. Basically, like-to-like footfalls have been, for the same store, footfalls have been up 20%. And therefore, their core EBITDA there has increased from 6.1 to 7.2%. So it's basically a beat on operational leverage. There is also an element of, nevertheless, other income doubling, and part of that is on sale of securities. So there is, of course, some element of a bit of a non-recurring profit, so to speak. So that has also helped in this quarter.
Hi, Jal Irani. Good afternoon. This is Nayantara joining in from the New Delhi studio. You know, RIL, with the kind of weightage it has performed very well. It rose 22% of the last year as opposed to a 6% decline we saw in the Nifty 500. But if I were to look at the third quarter results, what would you say to the naysayers, to the skeptics who go on saying that, look at the mainstay, the old economy business of Reliance Industry, which is still the major contributor to the bottom line, to the margins. The new economy businesses of Jio and retail are contributing about 1/5 of the profits. Do you expect a significant change in that kind of mix-up going forward? And are you at all concerned maybe about the amount of cash that Reliance Industries is continuing to burn, or will that be taken care of by the monetization plans it has outlined?
I think you have several questions wrapped into one, and I'll try and address hopefully most of them one by one. So firstly, the fact of the matter is that the so-called old economy, which is petchem and refining, frankly is the cash cow. And that is actually a business which Reliance has mastered and is in fact one of the most competitive globally and shall remain one of the most competitive globally. Just the term sort of old economy tends to have a negative connotation, but in fact, if anything, those are and will remain the most solid businesses, and they are in fact, expanding that as well. So, for example, they've got a $7 billion upcoming petcoke gasifier, which once started, of course, which has been behind schedule, but once started, we believe will be very profitable. And the consortium is also spending $6 billion on upstream, which production starts from the second half of FY21, and that also is likely to be very profitable. So the fact of the matter is that we can use whatever terms we want, new economy, old economy. Its core competence is actually, and its cash cow will always remain that business, basically. Separately, we understand from press reports that in fact Reliance is even looking at a third full-fledged mega refinery with downstream petrochemicals, fact of the matter is that we'll continue investing in that. Now, where some of the newer businesses are concerned, there is certainly material growth out there, and the thing is that Reliance essentially churns out so much cash that it has diversified into other businesses. Now, as a shareholder, that's one tends to give conglomerate discounts because that complicates matters. But these are new businesses which has a lot of investments which go in initially, and hopefully now they are beginning to perform. I think what will be also good going forward, I don't know if the viewers have noticed that Reliance has announced actually that it's a very significant portion of its Jio business, which is towers and fiber, will be spun off into a separate division, and that actually will be hived off. So to that extent, Reliance actually will become a more purer play into its traditional businesses, and therefore there will be some re-rating as well as the conglomerate discount reduces. So they're looking to partially, reduce the weightage on some of the newer businesses. Now, I don't know if I've answered all your questions.
I just wanted to ask you, do you think that, the next trigger for Reliance Industries, now these businesses are not small when you talk about Jio, the base that they have, retail, the sort of EBIT that they are doing, 1,500 crores a quarter. I mean, it's by no means small. Do you think this will be the year of demerger, or maybe in the next 2-3 years, that will be one of the biggest triggers in Reliance Industries?
So as I just mentioned, one of their biggest businesses, so basically the tower and fiber business, is a very asset-heavy business, and to that extent, a bulk of the Jio's investments have gone into that business. So they have categorically stated that they are transferring the assets into a separate company, which they're going to hive off, and that will be a material trigger to that extent. Yes, I mean, when it's exactly going to happen, can't say for sure, but I think they're looking to at least complete the process of transferring the assets by March end, if I've read correctly, if I've understood correctly.
Jal Irani, I know it's early, we're talking within 24 hours of the announcement coming in, but what is the street expecting? What are you expecting? How much can RIL really raise from this monetization drive once it begins to hive off all of these assets? Pankaj already asked you about the next trigger, of course, being the demerger. What, according to you, would be the next trigger, since we don't know the timeline for the demerger of Jio?
Reliance itself, they themselves are in the process of actually demarcating the assets and the liabilities. So I don't believe that maths even they themselves have done as yet. But a very preliminary and very sort of limited thoughts is that these assets could potentially be in the region of about 1 lakh crores, or maybe even more, basically. So there will be substantial assets which could be hived off.
₹1 lakh crore worth of assets could be hived off. That's what we're getting to hear from Jal Irani. Early days, within 24 hours of that earnings announcement. And like Jal Irani's also cautioned that maybe even RIL right now is figuring out the math. But it's always a pleasure chatting with you. Thanks so much for joining us here on ET Now to decode the third quarter numbers of RIL. That stock is up by nearly 2% in trade today.